Hello everyone, welcome to Chill Dill Trades. It's where I give my thoughts and opinions on the overall stock market, as well as finding specific stocks where I think there's opportunity or stocks that are maybe overvalued and you need to be careful around. But before we jump into the stock for this week, or this video, not a week, but this video, I just want to do a quick shout out to all the people who've subscribed and commented lately. So I think I have like 7 subscribers over my first couple videos. Thank you so much. I really do feel the love and feel very encouraged to keep going. And hopefully you guys can take some benefit from these videos I'm creating. But to shout these people out, I'm gonna shout you guys, all of you guys out. First, MG, appreciate you making a comment, even though you were a little suspicious about my kind of commentary on Alibaba. I love I love your thoughts and I love your opinions. And I love going back and forth to kind of see each other's perspective. Go GG everything. You the best. You commented on both of my videos and you left some encouraging words, so I really appreciate it. That was very nice of you. Carlos182, first person to comment on the Alibaba video. Appreciate it. That's very kind of you. For the other video, Ford and GM, Go GG everything. That's a great name also. Thank you for commenting on that. I really do appreciate it. King Baboon, you left some nice words. I appreciate it. This name I can't pronounce. DWN with E system. I'm just going to call it that. Thank you so much for the comment. And Space Beats Radio. You were the first person to comment on my video, I'm pretty sure. Or maybe second. Regardless, one of the first people. You are the best for that. So thanks everybody. Today we're going to talk about NYCB New York Community Bank. If you find anything beneficial, please like and subscribe because even more content's coming. But to quickly break up what this stock is, it's a bank. They're located, I think, in New York, New Jersey, Arizona, and a couple other states. And they're kind of your traditional bank. So banking, loans. They have some mutual funds that people can invest in, things like that. And so let's first look into the fundamentals of the company. So market cap, just under 6 billion. So they're not a micro cap company. They're in that kind of like mid-range, mid-small range. Or sales every year is just under 2 billion. So decent amount of sales, and their net income is 500 million. So it's about 30%, I think, ish, of their sales each year. One of my favorite things about this stock is their dividend. So for a smaller company like this bank is, they just upgraded their dividend, where it's just under 6%, so 5.66 per quarter. This is something really great. The reason I'm talking about this stock specifically is I've been more lately looking for stocks that have, I would say, that I still think have some potential growth and maybe unrealized growth in their stock price. But if the stock market doesn't go as we maybe think, that it's a little bit safer bet. And I like stocks with dividends as a safer bet because I still get paid regardless of if the stock goes up and down. Couple other things to look at is institutional ownership. So institutions own 60%. I love when institutions own more than 50% of a stock. And the higher from there, the better. It really shows that they have a lot of financial backing. And as I've been kind of investing over the last 8 years or so, I found that stocks can't move without institutions. It's really difficult to see significant long-term growth. And so I really like that institutions own a lot. One factor that I'm feeling a little unsure about is the short float. So 8%, it kind of tells me that people aren't too sure where the stock is going to go from here. It's not like a 1% where it's like people are just extremely bullish. There are some people who are betting against a pullback in the stock or downside. So that's just something that if you like the stock and you start following it, you want to pay attention to the short float. So from here, the next thing I want to look at is kind of how this stock has performed against kind of the whole industry of financial stocks. So let me scroll up first. There we go. So I pulled up a chart comparing NYCB to first the financial sector ETF. So this is just like more bigger companies holistically. S&P 500 regional ETF, and then S&P small financials ETF. And so the main story here that I just wanted to present is that NYCB has significantly underperformed the rest of the financial industry on average for ETFs. You know, along for the big caps and even the small caps. Like on both ends, it's significantly underperformed. And so when we look over the last 5 years, New York Community Bank is down 21%, where the Financial Select ETF is up over 150%. The regional S&P financials up 75%, and then small cap financial ETF for the S&P 500 is up 40%. Over the last year, we still see the same story. So even though stocks have moved up a decent amount the whole year, New York CB is only up 5%, where basically the rest of the sector on average is up between 50 and 30%. So this is, I could say concerning, but the reason I like the stock is for the opportunity. And I think that there could be an opportunity if we continue to see sales increase at the rate they are. So let's go down to how kind of revenue and income has been looking. So let's first go back to Q1 2020. So Q1 2020, 240 million revenue. That's not too great. It's pretty small, but they are a net income positive company, which is good. And so as I mentioned before, I'm really wanting to find companies that have net income. I don't want to see pre-income or pre-net income companies. I'm not looking at a lot of those right now, just with worries for myself around the market. But when we fast forward here to Q1 2021, we see revenue up 36%. So this is a really good sign for the company. For something with such a low PE ratio of 13 and a forward PE ratio of 8, it's good to see that this stock has grown year over year by 36%. Along with that, we've also seen net income grow, and we've also seen net profit margins grow. So this is really good. As what this is telling me is, even though their revenue and income is growing, as a company, they're potentially getting healthier in terms of their expenses are going down or their costs are going down, which is making that every dollar they make, they're making more after all the fees are paid and all the taxes and everything that comes between the revenue and net income. But let's go just kind of from 2021-20 to kind of see the growth. So, you know, down year over year, not great to see, but this is kind of during the COVID time. For Q2 2020, we do then see a positive growth year over year in revenue. So up 4%, Q3 up 10%, Q4 up 20%, and then Q1 up 40%. So it's good to see this continuous growth in the company. And I would say this is a stock to keep your eyes on right now, to kind of see how these numbers progress if we keep seeing more adoption and more growth in this company. Before we move on, let's just see how net income. So even when we look at net income or net profit margins, margins, this has grown every quarter as well. So we're seeing that the company's becoming more efficient quarter over quarter. So there's a lot of positives of this stock, and we just want to keep an eye on if it's still growing coming the next few quarters. Let's go ahead and look at annuals, and this is kind of, I would say, maybe the more concerning part for the business, and is kind of why it's underperformed, is if we compare it to 2016, it had 1.4 billion, but when we go to 2020, it had 1.1 billion. So, you know, if we compare the stock to a few years ago, it's actually doing it's doing worse, which is not a great sign. And that's maybe part of the reason why when we look at the charts, we kind of see that downward movement. But a positive here is from 2018 and 2019, you know, we kind of see, I would say, the rate of the decrease rate and revenue start to like level out a little bit instead of having it's starting to go like this. And in 2020, we actually saw that go up. So that could be a really good sign for the company. And that's the main reason I'm highlighting it right now is this could be a reversal story for this company as a whole. And I think this is something that we want to keep an eye on. The next thing I want to go to is institutional ownership. So as I mentioned earlier, this stock is institutions own, I think it's 57 or 58% of the overall company. And the main thing I want to highlight is from 2018 to 19, as we kind of just mentioned, the revenue has been declining. Institutions were selling out more. So you see a lot of red above green is more selling than buying from institutions. But in the start of 2020, when we started seeing, the revenue start to go back up a little bit, we started seeing institutions buy back in. So that's a really great sign for the stock that if institutions are willing to buy in its first up year of growth after the last 4 years, then maybe there's something to this. So from beginning of 2020, we see more buying than selling in everything except for the COVID quarter, which I'll call Q2 of 2020. Another really positive is we're seeing a lot of big buys by institutions lately. So 5/24, we see a $20 million buy. Just before that, a $14 million buy, an increase of 86% to their holdings. It's great to see when there's two things I really look for institutions. The first thing is that they're buying in big chunks, because that shows some validity, like, oh, people are really, really willing to put big money behind this company. And I like to see when they're growing their position significantly. So like for this company, 6 million is still a decent amount to put into something, but they increased their holdings by 200%. So this company, this institution might have substantial belief behind this company. And same thing, 44 billion. You see a lot of big buying. So that's something we want to pay attention to. Is moving forward, do we still see more buying, or are we starting to see this buying slow down and we're starting to see more selling again? So kind of pay attention to profit, net income, as well as institutional buying, and see the trend as we move into the rest of the quarters of 2021. Don't want to go this video too much longer, so I'm going to quickly cover some charts. And I already did all the trend lines. I know I usually do them live on the video, but I wrote them earlier so the video is not crazy long. And so kind of as we've already covered with, the trend of net income, we saw that peak in 2016, ironically. And we saw the stock basically be in a bear market since then. And that's when we saw more institutional selling than buying. Stock was going down. But in the beginning of 2021, we started seeing more buying. And that's where we saw this big increase right here. This was the end of 2019, beginning of 2020. And we saw a lot of buying. But what's really interesting is this stock saw a really bad 2020. It's basically like the first 3/4 of 2020, the stock was not having a very good trend. But something we want to think about is, what do we see in the charts? We saw more buying from institutions and selling during this downtrend. That's something I always love to see. That tells me that institutions were wanting to buy these sales at a potential discount because there could be a change shift for the growth of this company, this company could start heading back up in revenue. And if we just for the sake of it, if we see the company grow back to the revenue they had in 2016, we could potentially put a fair value of $19 on this stock if we go apples to apples. But just a couple price points to keep an eye on moving forward. Stock's at just over $12 right now, and we do have a lot of long-term resistance at $13, $14, and a $15 range. And as we can see more recently, the stock did try to break above 13 and failed and came back down. So that's just something to keep an eye on, is these areas of resistance. I went ahead also and did a couple other things. So we see a really strong upside buy, and we start seeing the charts try to test this trend line. So we really need this upwards trend line to hold. If not, it looks like we might be starting a downward basically cycle downwards and bouncing back and forth. Positively, this could be a bear flag or a bull flag. So we kind of see it go up and kind of correct, and we want to see it come back up and hold this trend line. I put some Fibonacci lines here just to keep track of where some potential buy and sell points are, but we really need to see this break out above this $12.50 and $13 price range to see more upside. So go ahead and watch this video back over and over to kind of see the charts. I know I went through it quick, but I appreciate everyone clicking on this video and watching it again. If you subscribe, I appreciate it. Please like, please subscribe, leave your thoughts in the comments, tell me what you think about this stock, and I'll talk to you next time.